Hey, what's up, everyone? It's Cameron here from themoneyventure.com. This is Invested, episode number 3 of an update on my stock portfolio. I opened an investment account on March 20th of 2020, and I had $0, and I invest $50 per week every Monday, and I show you how I'm doing it and how I pick each individual stock with real balances, real profits, and real losses. So don't forget to subscribe to our channel. Give us a thumbs up if you like the content. And stick around to the end. We've got an investment tip for you that will help you build a successful portfolio. So let's get going. All right, so let's dive right in. It's official. We have actually crossed the $1,000 mark in our portfolio. You can see that of the $1,000, almost $300 of that has been in gains and losses, or should I say gains? I say gains and losses because that's what they call the column here at the top. But as you can see, anyone can invest in the stock market during any market condition. As of this recording, we're in the middle of the current COVID-19 pandemic. But when we pick solid companies that have good fundamentals, that have good leadership, good products, good financials, and a solid visionary future, then you see that we can essentially build a very profitable and successful portfolio for the long term. Again, so it's not always going to be roses like this every single time. There will be times where we'll have down weeks or months. The point is we keep the long-term investment approach. Quick update on our holdings for those of you that are new. On the left-hand side here are the companies that we currently have that we own shares in. So starting at the top, we can disregard this one. This one is just Fidelity's basically money market account where they hold all of the cash that's not invested. But starting at the top after the money market fund is Axos Financial, which used to be called Bank of the Internet. They were the first online-only bank, basically. They rebranded to the name Axos Financial. Next one is Fiverr. It's the freelance platform for businesses and freelancers to do work together on a project basis and do it remotely. Roku, the streaming media devices that we all use and love to stream media across the internet. Stitch Fix is an online clothing company. They're actually more of a data technology company that is able to pinpoint appropriate styles for you and send you clothing in the mail every month, every quarter, whatever time preference you set. And they are surprisingly accurate, so it's more so an investment in their technology. This one right here is the Spider Portfolio S&P 500 Exchange Traded Fund. Again, we bought this share, this ETF mainly it was one of the first purchases in the portfolio to initially have some diversification. So when you're first starting out, it's a good idea to purchase an ETF that has, in this case, 500 companies in the fund, so you're diversified naturally until you start building up your portfolio. As you can see now, we've got multiple companies in there. So another added benefit of keeping the Spider S&P 500 in our portfolio is we can, this has been there since the beginning, and so we can actually gauge how the portfolio is doing overall. At the bottom here, 39.28% against what the S&P 500 is doing. Next company is Spotify. If you're listening to music, podcasts, most likely it's on Spotify. They are also a data-driven technology company that can pinpoint the music that you love and create playlists for you that are really accurate as well. And they provide exclusive podcasts on the platform as well. They just barely signed a deal with Joe Rogan, I think the largest podcaster out there. I think they signed a deal with him for like $100 million. And so he is now exclusive to Spotify, which is a great sign for us as investors. Second to last is Tesla, the car company that is working to have an energy sufficient future without having to rely on fossil fuels. And they're doing that right now through electric cars. And then lastly is Zillow, which is a real estate platform that allows you to both purchase and sell your homes through their platform. One of the reasons we invested in them is because I personally see them as being the stock market for real estate. Just like before the stock market, things people would trade stocks through shares, actual certificates, and then the internet came about, and now they can do it all online. In a similar way, that's what Zillow is doing with the real estate market. So that's a quick update on the portfolio. The new addition to the portfolio today, Tuesday on the 26th, I actually purchased $50 into Tesla. Again, you can buy fractional shares on Fidelity through the Fidelity app, but I put the $50 this week all into Tesla, and I'll tell you why. Apart from the financials and everything that I've done some research on and the growth that they've had, there's a video that was kind of going viral on social media that showed how Tesla's cars actually predicted an accident before it actually happened. And that in and of itself, in my opinion, is huge. It's exciting, and it just gave me all the more belief in the company, and I had to add it to the portfolio on top of the other fundamental research that I've done. So anyway, quick update on the total balance. Again, we just crossed the $1,000 mark. Total gain loss is 39%. We'll compare this to last week here in the next segment of this video. Total gain in our portfolio has been $294, and so essentially we've taken $600-700 total and turned it into $1,044. So next we'll show you a quick comparison of these numbers with last week's numbers, just to kind of compare and give you an idea of how the portfolio is growing. So here's a quick comparison side by side from last week. In this green box here is the total gain or loss in dollar amount, and this blue box is total gain loss in percentage amount. So the first column in both of these boxes is last week. The second column in each box is this week, and the third box is the change between last week and this week. So as you can see through each company, most of them have been positive, with the only exception to Tesla, which was the new purchase that we made today. So there's nothing to compare it to, but it looks like we lost 28 cents on our $50 investment so far. But the rest of them since last week have grown a decent amount. So as you can see, we've grown $62 total from last week, and that's just in pure investment money, or in pure growth, I mean to say. So without basically doing anything, we've made $62. So, and that's on a small portfolio of $1,000. So here it is in percentage, which is sometimes an easier way to look at it. Again, each company shows their percentage return from last week. Last week we had a total portfolio growth of 33%. Again, this is from March 20th of 2020, and today is May 26th of 2020. So this week, as of today, we're up 39.28%. So by any measure, that's an absolutely amazing return as of now. I expect that to probably go down in the future, just because the market will have some ups and downs, and so will each of these companies. But either way, I'll take it. And so, and then this is the total change between last week and this week. We've had about a total of a 6% change, and then here it is laid out for each individual company. So anyway, to give you perspective on that, this is just on a $1,000 portfolio. But if this was a $100,000 portfolio, then take these numbers and multiply this by 100. So this would be $29,000 since March 20th, just to give you perspective. And so the numbers start to get really big the bigger your total portfolio balance grows. And so again, we're starting out small. We started this from scratch, and again, the whole idea is to show you from beginning how the portfolio compounds over time and gains momentum and grows at an accelerated pace, just from picking good companies that have strong financials, a vision for the future growth of the company, and also companies that you love and believe. So you might be asking, why did I add Tesla to the portfolio? Well, to start off, they're a super exciting company. They're clearly doing things that are changing the automotive industry. A few other reasons are I absolutely love Elon Musk. I think he does things differently, and I think that is a great sign. I think he has such a visionary mind that oftentimes he does things that make people scratch their head, but in some roundabout way, that's, in my mind, that's proof of somebody that is onto something big. And not to mention his track record of Tesla and SpaceX and what he's been able to do thus far with both of these companies. I believe in their product. I absolutely believe in what Tesla is doing and their vision to create a more energy efficient economy. And I believe what they're doing that is going to change the future. I like how they do things differently because, for example, they do online only purchases where most cars, are purchased at a dealership. You have to go online with Tesla and actually customize and order the car yourself, and then have it shipped to you. They have a very strong brand name. Their brand is associated with high net worth individuals, and frankly, that's actually their market. Or, some of their cars, I think the minimum you can purchase one of their cars for is like between $30,000 and $50,000, and that's the bare bone minimum. So after I kind of went through those things about Tesla that get me excited about what they're doing, I look into their fundamentals of the company, and a few things that I like about their financials of the company is quarterly revenue growth. For example, year over year is approximately at 31.8% growth, which is a great sign of company growth. They have about $8 billion in cash, which means that they can take care of their immediate needs for sure, regardless of the economy, and you might even know their long-term needs. And so they got a lot of money in cash, and they have a lot of levered free cash. And levered free cash is basically your discretionary income, the money that's left over after paying the bills. So they got money coming in. They got a ton of money in cash. They do have a little bit of debt, which is about $15 billion, just under 2 times the amount of cash. Again, I'm not too worried about that. I usually, if it gets into the 3 times, 4 times, 5 times debt, or 5 times the cash that they have on hand. So if they had like $40 billion in debt against their $8 billion in cash, then that would be something I'd probably worry about. But because it's only 2 times, it's not that big of a deal. These are just a few of the things that I really like about the company, both in terms of why I believe in them and in terms of their financials. And to top it all off, I've been watching Tesla for a little while. I actually invest in them in some of my other personal portfolios, my retirement accounts, etc. But just today, actually, no, yesterday, there was a video, I believe I saw it on Facebook, that was showing how Tesla, one of the Tesla's cars, predicted what actually happened, and it showed it all on video, and it clearly shows that the warning sign and signals on the Tesla went off, an entire 1 or 2 seconds before the crash even happened. I'll try to include a link to that video in the notes as well. They had enough signals to see that the traffic was slowing down way ahead, that the cars in front of them were too close, that things were in a very high risk situation, and the cars in front of the Tesla actually crashed, but the Tesla avoided the entire thing. And so that was just kind of the icing on top that got me really excited, and pushed me over the fence on adding them to this portfolio. To round things up, here's our weekly investment tip. What we're going to talk about today is looking for companies with high amounts of cash relative to the amount of debt that they have. Consider looking at a household or your personal finances. The more cash that you have in your account compared to the amount of debt you have gives you a much more stable outlook for your financial future. So if something were to happen, or a bad economic condition or downturn were to happen, you would be okay for the most part for the short term, and maybe even mid to long term, depending on how much cash you have. The more cash that they have on hand, the more likely it is that they're able to literally control their future. They can control where they put their money. They're not bound by debt obligations. So generally, I like to make sure that companies don't have debt that is more than 2, 3 times, in maybe some cases 4 times the amount of cash. But that's really getting up there in my opinion. But I don't know if there's an exact number. But the point is the more cash they have and the less debt they have, the better. But for this tip, we're focusing mainly on the cash. The high amount of cash that they have compared to their debt, the better. Well, there you have it. That's all we got today on our update of the investment portfolio. Again, this is the segment invested by themoneyventure.com. Again, don't forget to subscribe to our channel, The Money Venture. Give us a thumbs up if you like the content. If you want more information on how to invest in the stock market, take a look at our course called You Don't Have to Be an Expert to Invest in Stocks. I'll include a link below in the show notes. You can also view our courses at themoneyventure.com. In the top right corner, there's a green button that says courses. You can also find additional information there. Any questions on any of the stocks that we have or updates on the portfolio, shoot me a comment. Just comment below. I'll be sure to answer it personally myself. And until next time. If you found this video helpful, please give us a thumbs up located just below the video. Don't forget to subscribe to our YouTube channel by clicking the subscribe button below to be the first ones notified about our latest content.